One of the interesting problems that I have in front of me is I am trading with a large amount of money and it's easy for me to diversify, but the people who are messaging me have smaller amounts of money, and so I want to go back in time and tell you how I lost money. And that is by reading all these stock books and all the stock books telling you how to pick individual stocks, make a fortune. And the problem with that is I didn't have enough money to diversify. These books are written for people who have a lot of money, and we just don't have a lot of money. So we have to start in a different place and diversify. And so anyways, after I lost a lot of money the first time I tried to enter the stock market, I went to my dad and I said, "Dad, I lost money." He's like, "Well, that was dumb, wasn't it? That was a good lesson." And I said, "Okay, Dad, what do I do next time?" And he said, "Well, next time you should buy a fund." And I think that that's really good advice, because buying a fund exposes yourself to a lot of stocks without having a lot of money. Before we move on to what to buy, I want to show you a couple things. I talked about buying Apple this week. Let me show you what Apple closed at. Apple closed at $121.06. Since I sold it at $123, 100 shares, that's about a $200 difference because I sold it higher. I took my profits. So then the other stock I talked about earlier this week was Groupon. Groupon closed at $2.73 is what I'm seeing here, and that's a pretty big spread. I sold it at $3.01. I had 1,000 shares. That's about $300 that I would have lost if I had held on to it. I get in and out of the market very quickly, and the reason I am not going to tell you how I pick and sell my individual stocks is because I would need a way to directly message all of you, "Get the hell out of this stock right now," and I do not want you guys to lose money and then come back to me and say, "Hey, Cent Rose is an asshole. He made me lose my life savings. F that guy." I don't want that to happen. And so what do we do from here? I want to give you one more example today of why to stay away from individual stocks. I wish I could go back in time and tell myself that. I really do. And you may not want to hear this information, but that is what I want to tell my past self. I want to say, stay the hell away from individual stocks. If you had Men's Warehouse in your portfolio, you are not going to like the way your portfolio looks today, because 2268, holy moly, this thing fell off a cliff, 45% down. Oh my God, that could wipe out your retirement. Exposing yourself to too much risk like that is a big deal. And I want to reiterate this, individual stocks are not the way we're going to go. I'm going to teach you to make money through other methods. So what do you do when you have extra money? How do you get into the stock market? You don't jump right in. You do not dump all your money into the stock market. Absolutely not. We are not going to do that. In fact, I have been taking my profits because the market's so high. That's why I've been playing with some ridiculous cars. I just have a great time doing it. But what I want to do with getting you guys into the market is to ease into it. And one of the best ways to do that is to buy an ETF. The one I want to recommend is S&P 500 ETF. The symbol is SPY, S-P-Y. If you just search SPY stock on Google, the chart will come up and you can take a look at it. Today it closed at $210.04. The market's at a very high point. When you first get started in the market, there's a lot of psychology involved, and you're gonna see your money go up, you're gonna see your money go down, and it's gonna hurt. You're gonna feel it in your chest. Seriously, it's stressful. In the financial crisis, when some people lost their life savings, they killed themselves. This is seriously stressful stuff. I'm not making a joke here. People stress out about money. And so the last thing I want you to do is to lose it. The exercise that I'd like you to do, that I would have liked myself to do, is just buy one share of this ETF and watch it. Maybe watch it for a few months. Watch what effect the interest rates have on this ETF, how it affects the market. Start reading the news, start reading the Wall Street Journal, and start getting a feel for the market, and start getting in the mindset that your money's gonna go up and down and you don't have control over it. And that is the worst. But the earlier you start this, the better off you are. What we're gonna do from here is to cost average in. And we are all working with different incomes on YouTube. Everyone has a different income. I know some people can probably only put away $50 a month, but hey, $50 a month is a lot better than no money a month. What I'm going to focus on here is how to save money to add to this. I know this seems silly. I know we read these stock books that say, this is how you pick a winner and this is how you become a millionaire and all this stuff, but it's such bullshit. A lot of us aren't born like Donald Trump, who got $1 million loan from his dad. Yeah, if we had $1 million loan from our dads, we could go out, start trading individual stocks and do very well. But we're not in that position, so we need to automatically diversify, and that is buying an index fund. It sounds so boring. I even do this. When I created my engine failure fund in February, when I said, I'm gonna play with these expensive cars, I need to insure myself against an engine failure, I'm gonna set $10,000 aside and put it in funds. And so I put them in mutual funds. I bought VBMFX, which is a bond fund from Vanguard, and then I bought VFINX, which is an S&P 500 fund. I'll throw the screenshot of it up here, how it is doing today. What I want to show you is that in February, I put $10,000 into these. I don't know what the total's at, but I think it's 10,200 and something now, but it only shows a $78 gain. Even though it only shows a $78 gain, I've gained over $200 off of that since February, and I haven't even looked at that fund. And that is the dividends, and that is the compound interest working. And that is a 50-50 split between bonds and equities. When you go to a financial advisor, they will often ask, what percentage do you want in equities and what percentage do you want in bonds? The market is very high. It might go higher, but I don't know where it's going. So I know some people say they're very conservative on YouTube. They're saying, I don't want to lose money, I'm a conservative investor. Well, you've probably come to the right place, because I'm pretty conservative too. I do not want to lose any money. I recommend you open a brokerage account and start with just buying one share of the S&P 500 ETF. You are not going to make any money off of this because the trading commission is about $7. It's about learning the lesson. It's about watching your money go up and down. If you are ready to put more into the market, then I would recommend buying about 5 shares, which is about $1,000 worth, and averaging in over time. Maybe once a month, you set aside $1,000 and you buy 5 shares of this and you watch your money grow. So that is how you average in. If you don't want to buy into the US stock market, you can buy into the European stock market. VGK comes to mind, and I've traded in and out of that. With ETFs, you can day trade them, you can go in and out. I've done that, I've made money off of those. That is how I recommend you get started training yourself in the stock market. If you do not have $210, the next video is what's gonna help you, because when I was younger, making money in college was difficult, and there's many interesting ways that you can make money. I had part-time jobs at the school, but they didn't pay me enough, and so I found other ways to make money, and I want to share those with you. The stock market is just where I put my extra money. I like to play with cars, I like to do all these other things. The stock market's where I put the money that I don't know what to do with. So I'm going to lay out all of my money management stuff. The stock market is such a small part of it, but it's important. It's important for your future. That is it for today. Thank you for watching, and enjoy your car.